Aiding investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. On this Monday, the 6th of January, we're looking at the Dow, very sharp Dow, almost at the high of the day. We went right to the 14-period exponential moving average. We've been anticipating. Actually, I should show you this chart because this is a chart this is a pattern that we talk about just over and over and over again forever. And it just repeats over and over. Market comes down sharply. I look at three patterns: straight up, straight down, that's one. Cup formation or V-shaped formation, that's two. Arch formation or inverted V, a pyramid shape, that's three. You can mix 1 and 2 and 1 and 3. When the price comes down very sharply and then bounces and then doesn't take out the left side low, that's a successful H test. When it takes it out, it could be a dreaded H because it's red, showing that it could be a 1-to-1 to the downside. Same way on the upside, when you get to a point and then you pull back and then you try to test that, how you break out above is very important. Well, we've gone this pattern. So what I said to subscribers, and the reason why we still remain along the Dow, we only have long positions, we don't have any short positions, is that this particular pattern, depending on the techniques that you're using, that's the technical tools, can then make a second arch formation, and whether it fails or not at the previous high is very important. So three things. Obviously, you can go down. Well, down would mean that it takes out the left side low and closes sharply below. That says, whoa, be careful because you can go quite a bit lower. The other is the lowercase h goes to an M because it's a bounce, and that's where we are right now. And the other is where everything becomes so successful that the successful H pattern becomes another cup formation. And if you close 2 out of 3 consecutive sessions above the arch, especially if it's at a peak A or a B, even if it's a B minus or whatever, that arch takes you down to, that could be very positive. Then you can go very much higher to the left side icon and maybe a doji candle or a gap or something. There is nothing like it in the Dow for quite a way to go. So we'll see what happens. And I'm anticipating that a chunk of the selling has been done and that now we're rotating through different sectors. And we're looking at this pattern being repeated over and over. Look, here it is in the Dow. Here it is in the S&P. A little different pattern because it's much bigger. The S&P made a high almost 6,100, comes all the way down to 58.32, bounces, and then I believe it held. Now, did I forget to? I thought I did it. 5832.30. It's not 50, it's 30. Was the low on the 20th, and 5829. It took it out. Oh, very good. Nice. I'm pleased I did that. 29, I can't remember what it was. 29 point, I think 70 something. I'll fix it in a moment. So it went to a lower low. So it went to a trough A, a trough B, a trough, not a V, but a B, and then a trough C 3 sessions ago, Thursday. And here it is, very sharply higher. Here's the resistance level. Chapman wave, because first of all, it's a falling axe formation. I don't want to go into that right now. Let's just say that this Chapman wave inside track repellent zone is going to be tested if it has another good session Tuesday into Wednesday. And what will we look at? We'll look to see, does it break into the 6,047, 6,040 area by Wednesday or Thursday, or does it suddenly stall and fill in today's gap? I'm looking at this very favorably. I like what I see. Days young, anything can happen. So the S&P is up 60 at 6,002. QQQ, index 100, broke the resistance level. That's really important. So the Qs are up 6.92 at 525.47. I mean, this is the Index 100. And look at that weekly chart. What a nice weekly chart. Look at the monthly chart. I don't see this. I've been talking about this for a while. Maybe I'm just completely off the wall, but everything I went through and everything I was showing to subscribers to my opening call with my overview video over the weekend, everything was looking like we've had a pretty decent daily pullback. That's the daily charts. The weekly charts are still holding really well. I mean, look at the SMHs, and they are really key. The SMH is up almost $10 at 261. And look at that break to the upside. Is this a brand new leg B, or is it a continuation pattern E? Well, what I do in this case is I say, you'll tell me. I'm just putting in the notation here, E/B, uppercase E, uppercase B. On the way up, it's always uppercase. Look at the weekly chart. You went right to this rectangle resistance level. If there, and often peak C1, C2, if it holds sideways, has a really good chance of breaking to the upside. If it breaks above this high right here, the high of the week of, in the semiconductors, the week of the 18th of October, 262.26. I'd say 262.27 does start a leg D, alternate case D/C. But if it's a little higher than that, that's really a breakout, and it says that the all-time high of 283.07 is not that far away. I wouldn't say it's an eye blink away, but maybe 3 eye blinks away. And look at the weekly chart, monthly chart. The rectangle formation there says that a new high starts a gray leg B. Oh, man. I don't want to get too excited here about this, but I am looking at something that says we've had a pretty decent consolidation. Since July, the week of July the 14th, when the semiconductors made an all-time high of 283.07 before plummeting down to the 200 level and then bouncing back and stalling for ages, for weeks, maybe 2 months. No, almost 3 months. Between 262, where it is right now, and let's call it 234. Okay? And now we're on the upper side of this rectangle. I can't say that this is negative. Now, I have a question comes in every once in a while. NVIDIA's 60p, or I don't know what it is, but something huge. I could look it up. I'm not going to look it up right now. And GE has a much lower. GE is making money. NVIDIA, well, they do make money, but it's a different way. And I looked at over the weekend, and I said, I like it. I listed a whole bunch of stocks, key stocks in the market, not necessarily goal-oriented. In other words, if this is moving up, then the whole market. No, just really individual stocks. I mean, even Boston Scientific, we kind of forget about these things in the medical area. Look at that, testing almost all-time highs at 91.18. 91.93 was the all-time high back in November. And then it dropped all the way to the 87 area. I mean, a lot's going on in this market. And let's go back to where we were. And what I'm saying is it's really important that you get, look, NVIDIA. So GE, as I said, is doing very nicely. It was a spectacular stock in 2024, then it pulled back sharply. But look at this. NVIDIA is almost at an all-time high. 152.89 was the high on the 21st of November. We are at 151.18 in leg C in the daily chart. I have to tell you, I'm impressed with this market. I'm impressed with this market. Guys, at 303, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back, and a couple of things that I meant to talk about on Friday, and I meant to discuss with my subscribers over the weekend, and just there was so many things going on, I just completely forgot about it. There are three things. Number one is the reason why I did not short Tesla, give it to subscribers as a short, TSLS, is because we would have got it, say, at $7.58, I think it was. And yes, it did scream, percentage-wise, all the way to the 866 area. I mean, percentage-wise, that's very nice, admirable for a position. But I'd say that with Musk, there are certain exigencies that make it that you could be absolutely correct. It's almost like a rogue wave where you've correctly identified the down move, and there's a sudden move that goes to a new high, but within seconds it's back down to the sell mode. I don't want to be in that position, number one. Number two is I didn't want to be shorting one of the best stocks on the market for a good part of the last half year. But the idea was that our 488.54 high on the 18th of December was a high that could turn out to be something not achievable in the shorter term because there's a digestive phase going on. And now look at this. So there's the move. We were looking at it right here. That was on the low of the on the 2nd of January. The low is 373.04. And look at this. I'm sorry, no, we were looking at it before, and then Tesla dropped sharply. I'm sorry, but we were looking at it before, and it right there. That's where it was a dreaded H pattern, of course, right there. That was on the 27th of December. We would have got in beautifully, and it did pull back sharply to the low. That's what I meant to say. This is the dreaded H pattern. goes 1-to-1, more than 1-to-1 to the downside from the arch formation. And then we'll look. I mean, it makes a low on Thursday, and then Friday has this huge move, fills in the gap, goes almost to the 9-14 period moving averages, and today it went above it. It's pulling back from the high, but it's still up 6. So you've got to be very careful. So the idea is that when you're shorting, it's really better to go for the weakest of the weak, because like the strongest of the strong keep going higher in the bull phase, the weakest of the weak, if they're fading, when things turn down, they go even lower. So that's what I'm looking at. So I'm still saying choppy for Tesla, but so that takes me to XPNG. Oh, XPeng. But I looked at it just a moment ago. I don't know why. It must be a Freudian thing. XPEV. Oh, XPEV. Right, XPEV designs, develops, manufactures smart EVs. Chapman. This is from China. And I said this one had a chance to at least bounce. The whole the market is very broad there, actually, from what I read. I know I'm not there, so I can't really say. This is what news that I can get. But I think it's stuck. It's making lower lows and lower highs. It's trading at $11.99, up 28 cents today. It's had a fantastic move from the 6s all the way to the 15s, and now it's digesting those gains. If you look at the monthly chart, it's a tough chart. It just says upside usually doesn't hold. It fails and comes back quite sharply. So I'm just saying, if you are trading this, if you're doing it with options, that's one thing, because you can get in and out very quickly, and you know exactly what you can lose, etc. I would just be very careful. It looks to me like it's stuck. Just while I'm doing this, let me do RVIN. RIVN. Let's try that. Rivian. Yeah, Rivian. Now that. I lost notation, so what can I say? Peak A, peak B, peak C, peak D, and then it goes to an E right here. This is a much better chart in the daily. The weekly has improved a lot, A, B, C, D, and now it's making a cup formation. If we can get above I'd say 16.80. If we can get above 16.80, there's a good chance that in January it should test the 18.86 high. But the monthly chart says, are you crazy? This needs a lot of work to really change the trend from down to up. So that's Rivian. Okay, so I wanted to do that. So there were 3 things that I said I was looking at. The other one was Boeing. So Boeing is up today, up 74 cents, but it's come off its high of the day, 173.94. We made a high of 182.57. There was a round number on the previous high, that peak E, at 182, and here we are much lower down. Oh, what did I forget to do? I forgot to say there was a round number in what? Oh, yeah, I'll be there. It's part of what I'm looking at. So Boeing is pulling back. I'm watching it closely, because this chart from 137.07 in mid-November to 182.57 at the end of December says to me something better is going on in Boeing, especially if you put it together with Jets, the airline index, up nicely today, up 57 cents at 25.70, just off not the all-time high, the most recent high of 26.10. So that's a good sign. So I'm saying that these airline companies are going to start putting their bids. They're going to have new airlines, planes at some point. Okay, so I want to do that. So when I was talking about Tesla, it struck me that on the weekend, on Sunday particularly, I did quite a lot of work, and I came up. I've had Uber as something that we've been wanting to buy for a long time. Should have had it ages ago. Didn't, but it's been really whippy. So this is fascinating. So Uber Tech, there's rides, there's food delivery, does all sorts of things. And at some point, probably we'll be doing a lot more in the area of driverless it'll be driverless for many things. That's really the point that I want to make. It isn't just for passengers, but it could be for goods. It could be for anything, right? So it makes what? An 87 round number high, all-time high, 87 in October the 11th, an 82 round number open on the same day. And then that's it. It comes all the way down. It comes down to the most recent low, 59.33 on the 28th of December. So I'm looking at this chart. I actually looked at it Thursday and I thought, oh, this is good. Then Friday I had really good action, but I needed to do some work, so I didn't discuss it with my subscribers. It was on my list, but I thought, I better just wait. I wanted to see what would happen. All of a sudden today it's got news about a what was it? There wasn't an offering. I think they were buying. I'm pretty sure they were buying back shares. So that's really a good sign, and it's good confidence in many ways. But I'm looking at it and I'm saying, is this a moment? Look at that monthly chart. That's not a great looking chart. The weekly chart, also not a great looking chart. But is Uber getting ready for a much bigger move? And my answer is, there are hints, strong hints, more than hints, in fact, that the technicals have started to improve a lot, that this move down from the round number high of 87 down to the 59s, that was a digestive phase. So I'm watching it closely. We did not get into this. I'm waiting. I like it. But I think this is one of those cases where I'd like to time it a bit better. We're watching it closely. Those are the three things I wanted to mention. And we're back to Dow's up 225, S&P's up 68. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So I had a question about FNMA, Fannie Mae, Federal National Mortgage Association. Look at that monthly chart. I'd drawn this in. I wanted it a long time ago, never actually got into it. What a nice thing, down in the under $1 at 50 cents way back. And here it is at $4.98. And when I was looking at it, I had it on my list for subscribers. I showed that there were certain stocks that are doing very well, and they are kind of within sectors. They're telling me a good story. But I wouldn't have got it. I wouldn't have got it on Friday because it looked to me like the open would be a gap up open, and I didn't know what to look. Thursday closes. It has a high of 3.52, and the low the following session is 3.52. I probably would not have got it because it closed a little lower than that. It closed at what was the close? It was 3.44. So I probably would have missed it. And then, huge move. And then today I would have missed it again because I thought, it's going to gap up. So I didn't put it in. But look at this. Yes, on Friday it closes under 450. Right now it's trading at $5.10 or 5.01, $5, right, really? But it hit 525. So this is fantastic. So, Preeti, you've had this for a long time, and congratulations. I mean, you've pointed it out to me. I should have taken it a lot more seriously because what I could have done and what I should have done, and even today I have a position that I wanted the subscribers to put on. We missed it by less than 20 cents, and now it's up very nicely, and it's in an area that is exactly where I want to be because it's the ETF for the area. Sometimes I like to get into the ETF and then we go for specific stocks within that group, in the components of it. But you want to be in. And we just missed it, and it's up very nicely today. I might have to chase it a little bit. We'll see. But there are times where, and I had this planned, but I changed the pattern. I wanted to say, let's do a split position. We'll get it with the gap up today. But I wanted to lower it down. And then I thought, the pattern I'm looking at says that if it actually pulls back, I could get both positions and then lose them both. I just didn't want to take a chance. So we missed that. But this is one where, because it's low priced, the idea should have been on Thursday. Once I looked at it, I said, if this breaks that cup formation and takes out the left side high of the 26th of November, this is FNMA, Fannie Mae, and goes above 3.42 by 1 penny, that's like a cup, and it hasn't even had time for a handle yet. That would be a Chapman wave cup and ladle breakout pattern that goes to a D. I should have thought of it that way and said, let's start a position, even though it's a little higher than I wanted, but we'll have two positions. We'll have what I call a split position. Have one, and we have another price lower down, that if we get it, then we put in a stop for them both, and then we trade them both, like we've done with Genie. This is Genius Sports. We took really nice gains. We still got our core position. We switched from the initial position. The lower entry price for the second time became our core position, and the other one we traded in and out. Now we're out. We've got the core position. So this is Fannie Mae, and I should have, even now this is a leg C. There's a way to do it so that it should go to a leg D. But now it's a little riskier because D's where other things can happen. But yeah, fabulous move. Congratulations. Next question came in here about Vuzi. Another one that I had on the list, and I've been discussing with subscribers for ages. Vuzi, Vuzi Core Smart Glasses, leg A in the monthly, leg D just started in the weekly, and this is a fantastic. Look how it's walked the 9-period moving average, and I look at this little cluster pattern. I thought, that was very interesting. Anyway, we can't complain. Our portfolio is still doing very nicely, but missed 3 really good entry points Pity. Okay, now what we're looking at, so yeah, VUS is very strong, but the whole thing is the 100-period moving average is at 6.06. What happens next? And that would take it to the area that it's been in 3 times over the last year, a year and a half, I'd say, of 6.06. Yeah, so the whole area of 6.06 is going to be the big test. If it breaks right through that, that's fantastic action. I'm going to put it down here because VUSI, smart glasses, it's just in an area that seems to me needs a little bit more study on my part, and it could be a longer-term position. All right, let's go on. We got the next question came in. Oh, yes, Basil High. Yes, that SMH monthly you showed been going up since October 22nd to July 24th. Would you call that an A to B? Let me just have a look here at the SMHs. I was on it before, but I didn't do it that way. Yeah, the SMHs, I would prefer to look at it as the rectangle formation. And the rectangle formation says if you have a sharp pullback from a D, E, or F, and you come back, if there is a stair-step move that takes you to peak A, you could in fact make a peak B, C, and even a D going back to the previous high, just under, right on, or just above, and then at any point after that, if you break halfway through the big rectangle, so it's a long rectangle in this case, the rectangle midpoint, which would be 240, you got to be careful because that could be the big sell-off. But at this point, it looks great. It does look very good. Yes, Duncan Steve, correct. Then chest drumming. Oh, yeah, chest drumming. Interesting you say that because I have someone I know very well who is a fantastic musician. He tours all over the country. And he was on a committee that I was on. And he has developed, he's a violinist, he's developed an electric violin, a fantastic instrument. But he also, he's this guy that's always, his mind is always working, has developed a chess set, a musical chess set. So, yeah, interesting. And what was the question, though? I got carried away. TSA, if it sells personal robots, it's going to 1,000. Yeah, you know, the thing with Musk is you only find out kind of a little later on what he's been, all the different things he's been in. I mean, now you've got this whole thing with the satellite. I see United Airlines is about to test his satellite system in their planes. That's why shorting Tesla is a little, wow, it's taking a chance. Basil, BRPHF. BRPHF. Oh, you've asked me about this before. When I have to look at this over and over to see I've got the right symbol, did I put that right? BRPH. You see what I mean? BRPHF. Yeah, we looked at this before. Broke out to almost all-time highs. No, to recovery highs. This is whatever it is, and that's called Galaxy. Oh, Galaxy Digital, right? Galaxy Digital Holdings Limited. Almost at a recovery high, a yearly high.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, we're back, and we're looking at, let me just finish this digital holdings. We're looking at this company. It's trading at $21.42, up 1.03, because it's got those 4 digits after the dot. It means that there was something wrong at some point, but anyway, it should be correcting itself at some stage. But it's doing very well. So the question is not how high it can go, because it's open all the way to 35 before, if it can break into the 22.5, 23 area, then it's open. But most importantly, you see the way it's done this U-shaped pattern. It's rather large. I put this in as a U, a cup formation. That can go to a D, a cup and handle. They can go to a D, not my favorite position, because once it goes to a D, you can actually pull back quite sharply into the cup again, which it did. Now it's made a second cup. So this pattern has, let me just look at it. Yes. So this pattern's a little different because now the 9-period moving average is cross positive. The MACD is good. The relative strength is really increasing sharply. The stochastic's still poor at 37%, so is the on-balance volume in the daily. Weekly chart looks fabulous. So what I'm going to suggest is this, that you are long, I know, and I'm just going to all I can tell you, because I know you're not going to do anything, there's a long-term position, is I would just say that if it closes in January, a close that is, 2 out of 3 sessions below 17, and here it is all the way up at 21.50, so that's going to be something will have to go wrong for it to do that. But it has had, in the weekly chart, you can see it's had big red candles, so it can do that. That'll say timeout. Still very strong in the weekly chart, monthly chart, but the daily chart will go to a timeout. Right now, I'm just saying to you, if we can go to 23, then this high that was made right here, the big spike in March of 2022 where it went to 22.06. Now you're free, and that ugly candle from December of 2021 with a high of 24.40 and a low of 16, all these round numbers, 24.40, that would be your next target. So very good. Congratulations. Next question came. Yes, price time. That's by tomorrow. It should try for the high of the 16th, which is 21.56. Today's high so far is 21.50. Okay, it's almost there. Next question came in. I missed it. I know that Dan in the den and asked me about a biotech, a microcap. Microcap bio collection, NKTR. I don't know if I should do this, but one of these days I'll show you. I got a list of these micro biotechs, and some of them, they don't show up very often in any news, but they've had some spectacular moves. Yeah, so this one's stalled very, Nectar Therapeutics, therapy, I forgot the P, and it's not nectar with an E, it's nectar, I believe. Pew. There's your P. Right, I got it. Oh, what's outside there, huh? So what we're looking at, we've got the resistance level at the 200-period moving average that has been support back in November. Big spike up from the 120 area to the 140s, comes all the way back, goes right through it, 1-to-1 to the downside, then goes back and retests it at 1.17 back in late November, and then it's goodbye. And then all of a sudden, over the last two sessions, back to 1.116 right now. So this move here, you see you've had a much stronger MACD throughout the pullback. The relative strength is very strong. The stochastic is moving very nicely, but only at 59%. On balance, volume is very poor. That's volume. So I'm looking at this, and this is called, it's like a Chapman propeller shaft, but it's a rectangle. So the price goes sharply down, then goes sideways, and then breaks the base. But it didn't do a 1-to-1 to the downside. It was much less. So this is, there's still internal strength. So I'm looking at this and I'm saying, this is what you would like to see. I don't know if you're going to see it, because right now, this big spike could say that it's a magnet line at 1.16, and it could just hold there for a little bit. It could go a little lower, then a little higher, but it keeps coming bouncing. What you want to see is, now you have to go to the weekly chart because the daily chart's not going to help you. You want to see any week that has a price spike to the 1.28, 1.30 level, and then closes on the Friday very close to that level. Can't pop up and then break down. It must close. That'll really help the weekly chart technicals. But up until then, all I can say is just a news-related up spike. Be careful, and definitely if it closes under 1.90, no, 1.90. I'm going to say, I meant 0.90, 97. No, I'm going to go to 1.07. If it closes under 1.7, it just gets stuck again. Next question is, I did that. Oh, I'm upset about three things today. So Fannie Mae, Vuzi. Who's going to upset me next, huh? Basil Galaxy price down. We did that. Yes, there's a left side, right side price time match. Let's just see here. Let's see on the YouTube questions. I'll get to it in a minute. Do you look at D-Wave QBTS already? What is that? Okay, let me just go from the top here. XLE and J&J. So I haven't even been able to see who asked the questions, but I'll just do this. XLE, this is the S&P. This is the energy sector ETF. Nice move up from the low that was made in the 82, 83 area. It made an most recent high with a double top that was up in the, there it is. So the last one was back in April of this year, where it went to about 98. Then it pulled back to the 82 level and went all the way back to 98, and then fell. I forgot to look. I don't think there were round numbers, but there was a Chapman wave 2-bar reversal at the 97, 85, and then 97, 92, and then 97, 74. So that three-bar reversal at the top gave you a very sharp pullback. So this is a work in progress. I like what I'm seeing, but the weekly chart did so much damage when it came back and made a slightly lower low on the left side. That was the low of September. That went to 83.02, week of the 13th. And here we are, just a few weeks ago, it went to 82.75. So not by much, but enough to say that it took out that left side low. This is a brand new move to the upside. There's a lot of work to be done. 89.76 is the 200-period exponential moving average. I want to see the XLE actually close in the 91 to 92 area any week in January. And then I'll say, okay, now there's a decent turn. So the monthly chart, you can see, is just a rising, higher highs and higher lows. That's a good sign. Next question with that was, I think that they wanted a 2 for over there. That was in the YouTube. J&J. Let me just do this J&J. It looks terrible. No, J&J is a breakdown, not a breakdown. Next question over there was no. QBTS.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
B, C, we're in leg D in the 5-minute chart. This actually could be an F/B in the 10-minute chart. Yeah, this has been spectacular. I decided last night that there was a really good chance that we could have a 2-click session from the E-mini. Anyway, question about D-Wave Quantum, leg C in the monthly chart, a leg peak C in the weekly chart, and a peak C in the peak D in the daily chart right there. And that went on to spike E. I'm going to keep doing this, F. All right, so quantum, this is QBTS. Trading up 91 cents, up 9.9% at 10.05. Yeah, that's the rectangle formation. I believe that this should take out the high that was made on the 27th at 11:41. That's the pattern that we're looking at right now, and that'll start leg 0.42 starts leg D. Hope that helps you. Next question was why am I? Where did we go? If you have time, no. I missed it. Oh, why am I? Yeah, WIMI, one that I followed ages ago, then I haven't looked at it for a little while. That had a big move up and a big move down. It traded to 289. Now it's at 149. Yeah, this is in that area that says big spikes don't hold. You've got to be very careful. What I would do right now, it could at 149, it could go down to the 130s. If you want to trade, if it can hold for 35 minutes or more above 1.85, 1.86, grab a little bit and just treat it as a trade. And that's all I can do there. But in the meantime, it has these big spikes up, big spikes down. You've got to be very careful. So I'm going to hand you over to Steve Rhodes. Check out my opening call, my daily newsletter. I think it's going to be quite an exciting 2025. I mean, the day is young. We're up 300 in the Dow, or 260, S&P's up 72. Dow's lagging. Dow should be playing catch-up this week, and that's kind of what we're trying to trade and play. So with that said, I'm going to say, yeah, so the question came in, are these buy the dips or sell the rips? I think at this point it's buy the dips, at least for a little while until we make that arch formation. Then we have